Hello and a very warm welcome back, champions of the market. It's the post-market wrap-up for today, October 16th, and what a day it has been. If you caught our pre-market analysis this morning, you know we were expecting a flat to positive session. But the Nifty didn't just go positive, it put on a stellar show. Let's get straight to the headline number. The Nifty 50 didn't just meet our positive bias. It absolutely smashed it, closing with a robust gain of 0.96%. The index surged and settled near the day's high. So, let's break down exactly what happened, how our prediction played out, and what we can learn from today's powerful move. Prediction vs reality, a deep dive. This morning, our call was flat to positive. We identified a positive bias of 0.56% from our data, but we also highlighted that mixed global cues, specifically a negative US session, could keep the opening muted. Now, let's look at the reality. The chart tells the whole story. You can see a steady, confident uptrend throughout the day. There was no flat about it after the initial minutes. The market opened with strength, absorbed any minor selling, and just kept climbing. Why did this happen? Our morning analysis had two key pillars. 1. The global mix. We said the negative US cues would be balanced by a positive Europe and a stable rupee. It seems the positive domestic sentiment and the strength in European markets completely overshadowed the US weakness. The USD-INR strength we pointed out likely supported fee flows. Though, the technical setup, this is where our prediction truly shined. Let's talk about the levels we discussed. Key levels performance review. In our pre-market script, we were very specific about our resistance and support levels. Let's see how they held up. Resistance levels, we said the first key hurdle was R1 at 25,424. The index didn't just cross it, it gapped up above it and used it as a launching pad. Check. We said the next target would be R2 at 25,519. Look at the chart. The price action respected this level for a brief period before decisively breaking out. Check. But the rally didn't stop there. The momentum was so strong that it even surged past the next major resistance, R3 at 25,577, and closed way higher. This tells us the buying pressure was far stronger than anticipated. Support levels, we identified S1 at 25,234 as our crucial support. The index never even came close to testing it. The lowest point on this chart is well above 25,500, which shows relentless buying from the word go. We also asked you to watch the 25,200 psychological level. That level wasn't even touched, confirming the overwhelmingly bullish intraday sentiment. For our day trading community, the strategy was clear: go long on a break above R1. That was the perfect trade setup today. Anyone who followed that would have caught a beautiful, trending move. Coming to sectoral action or market drivers, so, what drove this rally? While we don't have the final sectoral data on screen, a move of nearly 1% is broad-based. However, we can be almost certain that BANKNIFTY, which we highlighted as a key player, must have participated strongly. When Bank Nifty fires on all cylinders, it carries the entire index higher. Other sectors like auto, and Reliance likely contributed significantly. The key takeaway is that the market consensus was bullish, ignoring minor global headwinds and focusing on domestic strengths. Finally, conclusion or tomorrow's preview. So, to conclude, did our prediction match? The direction was perfectly accurate positive. The intensity, however, was underestimated. The market was far more bullish than our initial 0.56% bias suggested. This is a great reminder that while data gives us direction, market momentum can often surprise on the upside. What does this mean for tomorrow? Such a strong gap up close above key resistance levels now sets a very bullish tone. The immediate resistance now shifts to the 25,850 to 25,900 zone. On the downside, the previous resistances of 25,700 and 25,577 will now act as strong support bases. The trend is firmly in the hands of the bulls. That's a wrap for today's analysis. It was a fantastic day in the markets, and I hope the analysis helped you navigate it successfully. If you enjoyed this deep dive and want to prepare for tomorrow, make sure to smash that like button, subscribe, and hit the bell icon for your daily pre-market and post-market updates. What was your trade today? Let me know in the comments below. Until next time, keep tracking, keep trading, and take care.